Yeah, our conviction's quite high and our enthusiasm's high. I think stocks are about to have another rejuvenation of that face ripper rally for the month of April. I think the stocks did stall because of, COVID cases were sort of stalling, but I think we're now breaking to the downside. And then when we look at some of the earnings, especially something like UPS today, I think it's really reminding us that there's potentially a big demand surprise coming on top of a margin surprise, which means earnings could be doing significantly better. And I think people just want to be cyclically tilted if that's true.
Let's hit UPS because, as you said, Tom, shares are soaring today. The company delivering blowout earnings. Frank Holland with the details for us. Frank.
Hey there, Sarah. UPS stock up more than 10% after reporting another strong quarter. Revenues a beat, EPS more than $1 above estimates. Two key metrics showing the real strength of this quarter. The average revenue per package here in the U.S. increasing by 10%. Their ground division that handles the majority of U.S. e-commerce, that saw volumes increase by 15%, revenues increased by 27%. UPS says small and medium-sized businesses were the driver. UPS declining to provide forward guidance, but its shares and FedEx shares still trading higher right now. Important to note, this is the last quarter before pandemic comps. Back over to you.
Frank Holland. Frank, thank you very much. Mike, I like what Jim Cramer said. He said this was totally underestimated because the analysts were sexist against Carol Tomé because it's usually a man's business. She comes from Home Depot as the CFO there and clearly is delivering. Is this bullish for the economy or is it a transports thing, which they have outperformed? They've been running up week after week.
I think it can be both things. I mean, I think obviously they're very, very geared toward domestic economy, very kind of tight logistical story, pricing power, all those things working together. And earnings estimates have had to race higher. I mean, back 6 months ago, this year's estimate was like $8 a share for earnings. It's now $9. Probably has to go up after this quarter. So that means that the valuation, which is looking pretty full on a historical basis, is probably less extreme than it appears. I will say the valuation gulf between UPS and FedEx, the premium that people are paying for UPS right now, is looking a little bit wide relative to, let's say 15, 20-year history. But that in itself doesn't really tell you that it's about to reverse.
Tom, is this a sector and the transports as a whole that you think can continue to march higher?
Well, transports are an important group to watch because it's a barometer of the economy, and I think it really is a leading sector. So when transports are doing well, and the Dow can confirm it, I mean, I would say that's kind of a risk-on scenario, and it really does affirm that investors need to be a lot more cyclical. Most of our clients are sort of becoming defensively positioned. I think they think the market's topping. That's why, again, news like UPS today is just a reminder cyclicals still have a lot of legs left.
Shepard Smith here. Thanks for watching CNBC on YouTube.